It's time for the market prep video here on Stonkcast for the week of July 28th. Folks, we got a barrage of economic data coming out this week. We will, of course, be breaking down all of that. Plus, we got key earnings on deck with Microsoft. We got Meta and other big hitters coming out this week. Oh, by the way, the Fed will be releasing their rate decision this week. It'll be the last one that we get until September. We will be breaking that down as well. And stick around until the end. I will, of course, be breaking down the latest with Opendoor, including a whale-sized reason I believe you need to be paying attention to this company, and two important dates if you are a trader or investor in this company as well. Stick around for all that and much, much more. As always, make sure to like, subscribe, and follow wherever you listen to podcasts. And now, folks, let's get into it. Welcome back to Stonkcast, the market show for the average Joe. Whether you're a diamond-handed degenerate looking for the next 500% play or a more conservative swing trader or investor, we've got you covered. We tackle the latest market news, give our 2 cents, and maybe, just maybe, help you make some money along the way. I'm your host, as always, Brandon Shar. Welcome back, folks. We got a fresh market prep video for the week of July 28th. We got a lot to get into, so let's jump right into it. So first of all, I want to do a breakdown of the overall market and see where we left things off as of last week. If we take a quick peek at the S&P 500, we closed Friday at 6388, another strong day, another record high, and we just continue to fly high as we get solid earnings, solid hard data coming in, and we're really just in a very, very solid risk-on environment right now, and the numbers don't lie, and the charts also don't lie. So the S&P 500 looking fantastic right now. Some of the Fibonacci extension levels that I'm paying attention to, 63.34, we blasted through that on Wednesday last week, and really the next level I'm looking at will be the 61.8% level, which is 64.67. I created these Fibonacci extension levels based off of the April lows when we had the reciprocal tariffs announced. So that's just some of the short-term levels that I'm paying attention to on the S&P 500. Quick check-in on the relative strength index, the RSI for the S&P. We are a bit overheated, so just be aware of that. We're currently sitting at 76 on the RSI, which is technically overbought territory. But as we continue to get solid earnings, solid guidance, positive hard data coming in, it doesn't really seem like there's anything that can slow this down, especially if we continue to get tariff deals inked on paper. Quick check-in on the tech-heavy NASDAQ. As of right now, the NASDAQ also hit an all-time high last Friday and is looking just swell. Quick check-in on the Russell 2000. Via the ETF IWM. So the Russell 2000 doesn't look as amazing as the NASDAQ or the S&P, to be clear, but it is still looking pretty good. I mean, we're above all major moving averages. I got the 200-day, the 50, and the 20-day moving averages listed here, so we're looking pretty good there. We're kind of consolidating right now. I would expect this thing to basically follow suit with the S&P and with the NASDAQ. The all-time high on IWM is 244, so not too far off from that, and definitely well off the April lows that we saw there. Quick check-in on the VIX. The VIX right now is sitting below 15, if you can believe that. It closed Friday at 1493. Pretty insane. We're at 5-month lows on the VIX right now, and basically all you need to know there is that we are clearly in a risk-on environment where basically investors are they're not concerned. They're not really too concerned about any uncertainties in the short term, and that's being reflected in things like the VIX. When the VIX is above 20, it's a lot of uncertainty. When the VIX is below 20, there's a lot of confidence in the market, and right now we are most definitely seeing that confidence. All right, let's do a quick check-in on Bitcoin just to see how things are looking in that space right now, in the crypto space. And at time of recording, Bitcoin is currently sitting at 117,889, and it's down 0.06% on the day, so pretty much flat. As you can tell here from my chart, we got some consolidation, kind of like a bull pennant, if you will, that is forming here. A bit of consolidation. I would fully expect Bitcoin, barring any bearish news, to break its all-time high of 123. It's just a matter of when that's going to happen. But as of right now, we're seeing some pretty healthy consolidation, I would say, in Bitcoin, especially after the recent run-up that we had since the end of June. By the way, this is TradingView, in case you're not aware of it. It's an amazing charting platform. There's a couple different ways that you can support the show. Of course, liking, subscribing, that definitely helps. But if you're looking for a trading platform, I use Thinkorswim and TradingView. I would say TradingView, which is this platform, they have a better UI, a better user interface, and just a really cool community. So if you're interested in this, check the link in the description below of this video. You can get $15 off. So as of right now, that's what we got on Bitcoin. And with that, let's move on to some macro news. So first of all, let's do a quick check-in here from CNBC. The EU chief to meet Trump in Scotland in push to avoid a transatlantic trade war. So this, according to CNBC, European Commission President Ursula von der Leyen will meet with U.S. President Donald Trump in Scotland over the weekend, aiming to reach a framework trade agreement shortly before a 30% tariff on EU imports takes effect. In a post on social media platform X on Friday, the EU's von der Leyen said she had agreed to meet with the U.S. president on Sunday, quote, to discuss transatlantic trade relations and how we can keep them strong, close quote. Trump later confirmed the meeting would take place as he arrived in Scotland on Friday evening, saying, "We'll see if we can make a deal. I think we have a good 50-50 chance," he said. "That's a lot." It comes amid a sense of growing optimism about the prospect of a tariff breakthrough, with sources telling CNBC that the current base case scenario for a deal includes a 15% tariff on EU imports to the U.S. So we do know that as of now, the U.S. has gotten some deals done. The most notable one of late was Japan. Obviously, we're still waiting on China. We kind of got a reprieve with China for that trade war in particular, and we're still, of course, waiting on details on two of the largest economies in the world if they're going to come to a more long-term trade agreement. But one of the other notable players that we've all been, watching cautiously is the EU. This is also a very big one. And, the fact that we got Japan last week, if we can get a deal done with the EU, that would just be more gasoline on the fire for this bullish run-up that we're seeing in the overall market, I would imagine. So anyways, continuing with this article, though, it comes amid a sense of growing optimism about the prospect of a tariff breakthrough, with sources telling CNBC the base case 15% tariff. Trump has threatened to impose tariffs of 30% on EU goods beginning August 1st, prompting the EU to consider countermeasures as part of its response. The U.S. and EU have the largest bilateral trade and investment relationship in the world, representing almost 30% of global trade in goods and services, and accounting for 43% of global gross domestic product, according to EU figures. So Trump's 4-day Gulf-heavy visit to Scotland is also expected to include an informal meeting with UK Prime Minister Keir Starmer. Unlike the EU, the UK recently struck a trade deal with Trump's administration, one which is centered on a 10% tariff baseline on British goods arriving in the U.S. So we got a deal done with the UK, and now we're just kind of waiting on the EU to see what happens there. So obviously, as CNBC says in this article, hopes of the U.S. and EU averting a transatlantic trade war by August 1st have been buoyed, at least in part, by the recent announcement of a framework agreement between the U.S. and Japan. The U.S. and Japan deal, which Trump described in a social media post as perhaps the largest deal ever made, includes a baseline tariff rate of 15%. Jack Allen Reynolds, deputy chief Eurozone economist at Capital Economics, said Friday that a similar framework for the EU might be seen as a case where a bad deal is better than no deal at all. Reports this week suggest that the EU and US are on the brink of agreeing a trade deal with a 15% baseline tariff on US imports from the bloc. It's hard to spin it as a good deal, but it would at least avoid much higher US tariffs and retaliation from the EU. So we will see what comes of this. Obviously, this has been the big news over the weekend when we're talking about tariff news, when we're talking about macro global implications. Whether or not we're going to get this deal done is really just another step further in solidifying, all the tariff uncertainty. And I think right now, that's one of the things the market is looking for. It's looking for certainty as it relates to tariffs. As we all know, this has been part of the reason why Jerome Powell has been holding off on cutting interest rates, because the ambiguity around tariff policy, around fiscal policy. And so as we continue to hash out these deals, that's why I say it's just more gasoline on the fire, if you will, for this bullish run-up as we get more certainty in the market. So that is the latest tariff news. So we will, of course, be keeping tabs on that throughout this week to essentially see if we get this deal done or not. All right, moving on now. So key economic data. As I said on the onset of this video, we got a barrage of economic data coming out this week, just a slew. So let's go through some of the things you need to be paying attention to. These are all highly volatile reports that are coming out this week. So first of all, on Tuesday, July 29th, we're going to get the CB consumer confidence for July. Previous at 93, forecasted 95.9. So expected to bump up a little bit there. That's interesting. That comes out at 10 a.m. Eastern time on Tuesday. Also at 10 a.m. Eastern on Tuesday, the JOLTS job openings for June. This is a massive, massive report on job openings, and you can definitely believe that the Fed will be paying attention to this, as this is part of their dual mandate of low inflation, high employment. So the previous number here was 7.76 million. We have a forecast of 7.49 million. So a slight downtick in job openings here is essentially what is expected. Wednesday, July 30th, we're going to get ADP non-farm employment change for July. Comes out at 8:15 a.m. Eastern. We're going to get GDP quarter over quarter for Q2. That comes out at 8:30. Crude oil inventories comes out at 10:30. And then the gauntlet, folks. We're going to get the FOMC statement, the Fed interest rate decision, all coming out at 2 p.m. Eastern on Wednesday, July 30th, and then at 2:30 p.m. Eastern, which I would argue is probably the thing you need to be paying attention to more, the FOMC press conference with Fed Chair Jerome Powell. Everyone is going to be very, very curious to see what his stance is. As far as the actual interest rate decision itself, that's going to be a nothing burger. I mean, at this point, according to CME Group, the probability of a 25 basis point cut on Wednesday is sitting at 4.1%. So we're not going to move anywhere. Everyone knows that. We're going to stay right where we are at as far as that interest rate decision. However, what he says at that press conference at 2:30 is really going to be what everyone's paying attention to. Is he going to be leaning more dovish, especially as we continue to get trade deals in place, as inflation remains, relatively, low and continues lower, and with the employment numbers that we get as well that morning, I'll be very curious to see how he responds to some of the questions that he will get on Wednesday, whether or not we're going to see our first rate cut of the year coming in September, because keep in mind, we do not have a Fed rate decision in August. So we get a breather in August, and then in September, they will be back with an interest rate decision. So a lot to unpack on Wednesday. And then Thursday, July 31st, we get core PCE price index at 8:30 a.m. Eastern. You also get initial jobless claims coming out. The forecast is 222,000 versus the previous of 217,000. So an expected uptick in initial jobless claims. You're going to get Chicago PMI for July as well. And then Friday, August 1st, we're going to get average hourly earnings month over month for July, non-farm payrolls, unemployment rate, S&P Global Manufacturing PMI, ISM Manufacturing PMI. So a ton of data coming out next week. These are all market moving events. So regardless of your position in the market, if you're an active, swing trader, investor, especially if you're a day trader, you need to be aware of these events because they are going to have major impacts on the overall market. So that's what we got there. And now let's move on to some of the meme frenzy. I wanted to get into a little bit of Opendoor. Obviously, we've been covering that on the show for the past few episodes. And one of the things that I wanted to highlight, first of all, is a post that Eric Jackson put out the other day regarding just some of the key reasons that he had, the key catalysts why this company, he believes, will continue to go up. Obviously, if you haven't been paying attention, Opendoor is now considered a meme stock. It's a part of this whole meme frenzy we're seeing over the summer, including some sympathy plays, in my opinion, such as Kohl's, such as GoPro, such as Rocket Mortgage, Krispy Kreme. I mean, you got a bunch of these heavily shorted companies that all of a sudden are getting attention from communities like Wall Street Bets. But the one that started it all was Opendoor a couple weeks ago. And part of the reason it got started, beyond Wall Street Bets getting a hold of it, was Eric Jackson essentially tweeting about the company and saying it was going to be a 100-bagger and putting a price target on the company at $82. So he put this tweet out on July 24th and just listing out some of the key catalysts that he believed for Opendoor. So first of all, Fed will cut rates at some point. Housing demand returns. iBuying can print serious profits at scale, in his opinion. Open is sitting on AI-driven efficiencies that haven't even been tapped yet. And then also, when the turnaround locks in, this trades at 4 to 5x forward EV/revenues. That math equals $82 a share by 2028. So those are some of the key reasons, according to Eric Jackson, why he is so bullish on this company. And it's a very interesting play. I would have to say the more that I look into Opendoor, the more interested I become, because it has a lot of characteristics that make it really feel like a recovery play and less of a meme play, which is really what Eric Jackson has been saying this whole time. He actually takes offense at Opendoor being called a meme play because he doesn't view it as that. So let's take a quick look at basically the chart for Opendoor and basically just see, how the past week looked for it. So one of the things that I've been pointing out on Opendoor in particular over the past week or so are some key Fibonacci retracement levels. Very simple. I basically just drew it from the all-time low, which we had back in late June of 51 cents, versus that high that we had last Monday on that explosive day when we were up over 120%, hitting 497. And then based off that, you have some key levels that the stock will retrace to and then bounce potentially. So these are great entry level points. It's a great way to gauge the overall health and momentum of the current company and the current trend. So some of the levels that, I pay attention to, there's more, of course, when it comes to Fibonacci Fibonacci retracements. But some of the key ones I like to pay attention to are going to be the 38.2%, the 50% because it's a psychological level, and then 61.8% for those really, really deep retracements. So unfortunately, we blasted below the 38.2. We tried to hold the 50% on Tuesday, and then we essentially gapped below that on Wednesday, as you can tell here. And here is what I find really interesting and in the short term, very promising if you are a bull on Opendoor. We came down to the 61.8% retracement level on Wednesday, and we wicked back up, showing buying pressure. We got as low as $2.04, almost tapping $2 exactly, but buyers stepped in. And then on Thursday, we tried to make a push above that 50% level, got pushed back down. And then if we look at Friday's price action, very, very bullish in my opinion. You have this massive doji going on here. We wicked really high up. We tried to retest that 61.8% level that we violated on Wednesday, and the bulls stepped in and pushed it back up. So one thing that I said in a previous video is that I believe the thesis for at least the short term, right, is still bullish as long as we can hold above $2. That's really my own personal opinion. I think if you break below $2, I think the momentum is over and the bears are fully in control. But as long as we hold above that, which, happens to line up with this 61.8% deep retracement level, there's a pretty strong probability that we will bounce from here if, right, keyword there, if we can hold this level. And so far, what we've seen towards the end of last week is we have been able to do that. And it's kind of hard to tell from a daily chart, but if I drop down here to a 4-hour chart, you can tell that really what we had over the last 3 days of the week, ending last week, was some really healthy consolidation. We've kind of been going back and forth between this level of essentially 221 and 274. We've been in this range, right? We're spending time in this range, which really isn't a bad thing considering how overheated the RSI was on Opendoor. I mean, goodness sakes, on Monday last week, that RSI was at like 95. I was like, I'm not even sure if I've seen a stock go to 100 on the RSI, but this might be the first day. And then, of course, it got, crushed afternoon towards the end of the day. I think it was around 3 p.m. But, we were insanely overheated. Stocks do not just go up, folks. It's kind of like when you're running, you go like a full sprint and then you got to take a breather and then you get your energy back and then you can sprint again. That's essentially how I'm viewing Opendoor right now. We had this sprint action, parabolic move, almost 2 billion in volume on Monday, heavily active stock. And then now we're taking a breather, right? And if we look at where the RSI is at now on the daily chart, it's cooled off a little bit, still kind of high though. On Monday last week, we hit 95. And as of the close on Friday, we're sitting at 69. So we are technically below what would be considered technically overbought territory, right? On the RSI, which is anything above 70, anything below 30 is oversold. So as of right now, we've given the RSI time to cool off, which is good. Now, as far as volume for the overall stock, we want to continue to see that we are getting momentum. We want to make sure the momentum isn't dying off, right? So one of the interesting things here is relative to the average trading volume on Opendoor, which is right around, I would say, 30 to 40 million shares on average per day. If we took an average of, let's say, the past 90 days, it's probably somewhere around there. We are still seeing high relative volume, which is good. It tells us that this is still an active stock. This is something that is still on people's watch list. People are still actively involved in this. Friday's volume was 233 million. So that's still very high. Yeah, it's not over a billion like we saw on Monday or, Tuesday last week, but it's still relatively high. So as of right now, it still looks good to me. I'm still bullish on it. Full transparency. I still have a position on it. I have calls, I have shares. But again, as long as we hold above that key level, I think that's what's important. So now I want to get in, as I said at the beginning of the video, to one of the things that I've been looking into more and more as it relates to Opendoor, and really why I believe that this company is more than just a simple meme play. So one of the things I want to point out here, first of all, is going to be institutional ownership. I've seen a lot of things floating around online about high institutional ownership. Now, there are a lot of sites that you can pull this information from. Refinitiv, I have MarketBeat pulled up here. You have Finbox. You have a lot of different sites you can go to, Yahoo Finance. So you're going to see mixed numbers. They're not all going to line up, right? And it also depends on when companies are reporting, some of those filings to sec.gov. But MarketBeat is the one I'm going to reference here. Now, if we take a look at current institutional ownership, this is the amount of the float of Opendoor that is currently being held by institutional owners. That percentage, folks, is 62.36% according to MarketBeat. Why is that significant? That is highly significant Because if we look at other meme plays, other meme stocks, right? One of the big knocks against them is that, oh, this is just the retail crowd pumping this thing up. It doesn't have legs. It's going to fade off anyways. It's just a short squeeze, right? And one of the things about Opendoor that makes me believe this is more than just a meme stock, this is more than just a short squeeze, is that institutional ownership. That is highly significant. I went back and looked at institutional ownership for GME and AMC back in 2021. Both of those companies didn't even come close to half of this number. AMC, I believe, was right around 20-25%, and really about the same for AMC as far as institutional ownership at the time of the height of retail interest back in 2020, late 2020, early 2021, right? So the fact that Opendoor has more than double that when it comes to institutional ownership percentage is huge. These are companies that invest for a living. It's not some guy sitting on his couch, drinking a soda, playing around on his laptop, hitting a buy button. No, these are companies that are well established. They do this for a living. They have proprietary software. This is what you call smart money, folks, right? And so the fact that you have such a large percentage of smart money in Opendoor is huge. That's huge. That is whale interest. And that's something you want to see if you're a bull on this, because it tells you there is other conviction in this company. So if we scroll down here on Market Beat, you can actually see some of the largest institutional ownership by percentage of ownership in the company. So the top of the board, Vanguard Group, folks. Vanguard, at least according to this report from MarketBeat, currently holds over 86 million shares of Opendoor stock with a market value of over 87 million. And as far as ownership in Opendoor company, that accounts for 11.916% of the company. Vanguard, folks, has a massive stake in Opendoor. Vanguard is a huge, very successful company. I don't think if Opendoor was on the brink of going bankrupt or going under, that Vanguard would currently be sitting on over 10% ownership of the company. Just my own personal opinion. I'll let you, think what you want, but that's just my own 2 cents. Also, T. Rowe Price Investment Management, they hold a significant stake as well, a little over 2.5% ownership in Opendoor. They have over 21 million shares in the company. You got Charles Schwab Investment Management holding over 12 million shares, to Sigma Investment, Millennium Management, just to name a couple, Goldman Sachs. These are major, major institutions, folks. And one other interesting thing here, I didn't see this on MarketBeat, but with a quick search on another website, just for confluence sake, BlackRock, folks. BlackRock is also involved in Opendoor. Latest disclosed ownership for them is just over 12 million shares, which represents a 1.7% ownership in Opendoor. BlackRock, as most people know, one of the largest companies in the world. They buy up real estate like no one's business. And so the fact that they also have a stake in Opendoor, I think, is massive. So does this mean it's going to go to $82 tomorrow? No, of course not. But what it does mean is that there is institutional interest in this company. And we also can tell that by looking at something called dark pools. So if you're not familiar with what a dark pool is, it's basically just a private, non-exchange trading venue where large institutions like hedge funds, mutual funds, and pension funds buy or sell massive blocks of shares without publicly revealing their orders beforehand. So there's a lot of controversy around it, but essentially they they exist to avoid slippage, reduce market impact if you got these large bulk orders coming in, and they also help to execute block trades discreetly between major whales. So instead of them going out on the market and trying to buy up, 5 million shares at once and inadvertently move the stock price, they go into what are called dark pools to do this action. And so I mention all that because of the fact that there was a post I saw on Webull that was really interesting regarding some of the dark pool activity that has been happening in Opendoor. So as you can see here, these are dark pool open orders that have been happening in Opendoor of late. So these transactions actually happened in the morning on July 24th last week. You got orders of 3.9 million, 3.15 million, 1.62 million, 1.59 million. So there's a lot of activity happening at the institutional level on Opendoor. That is the point that I want to get across to you, is that we have a significantly higher interest, open interest, right, in Opendoor by institutions that we didn't see with a lot of other meme stocks. Look, GoPro isn't going anywhere. People are not going to be wearing GoPros on their head, tomorrow. It was fun while it lasted. It was a sympathy play off Opendoor. Same with Krispy Kreme, right? These are highly shorted companies for a reason. Most companies that are highly shorted are highly shorted for a reason, because of the fact that, they're kind of losing steam. Competition has changed, right? Things like that. I don't expect some revolutionary change coming from Krispy Kreme, Kohl's, GoPro, all these other sympathy plays that we've seen over the past week. However, I don't believe that Opendoor is in that same category, and therefore I don't view it as much now as a meme stock as much as I view it as a recovery play, mainly because of that institutional ownership and some of the other things fundamentally that we're seeing with this company. I heard Eric Jackson talking about the fact that, when you talk about Opendoor, I mean, this is a company that, has spent a lot of time understanding that basically they need to include real estate agents in the process. And if we talk about the real estate industry at large, it's kind of archaic. Let's be honest. It takes a long time to sell a home. It could take a long time to buy it. You got fees associated with it. This is a sector that is prime for some kind of innovation, and Opendoor has the technology to do that. And I think that is something that the overall Wall Street is not pricing in right now. And I think that's part of the reason why Eric Jackson is so bullish on it, while Wall Street remains not as bullish. They're not really seeing what he's seeing when it comes to some of the technology. When you get interest rate cuts coming from Daddy Powell, some of the impact and some of the flow that Opendoor will be able to have with those kind of, tailwinds behind them on a macro level. So I just thought that was a very, very interesting piece there as it relates to institutional ownership in Opendoor. And also keep in mind that we have two very important dates coming up for Opendoor as well. Keep in mind that on July 28th, so on Monday, there's going to be a special meeting of stockholders. The vote will determine whether to approve a reverse stock split at a ratio between 1-for-10 and 1-for-50, with the exact ratio to be decided by the board of directors. The purpose of the split is to maintain the company's NASDAQ listing and support long-term shareholder value. So the meeting is scheduled for 9:30 a.m. Pacific time on July 28th. Stockholders of record as of June 4th are entitled to vote. So if you've been a shareholder since June 4th, you can vote on this. But this is a very, very important date for Opendoor and for Opendoor's investors. We're basically going to find out, is the board going to show confidence in their company, confidence in the fact that of late, it is NASDAQ compliant, it is above $1. Are they going to decide to pull this proposal for the reverse stock split? Or are they going to vote to approve it? Now, if they vote to approve it, that doesn't mean they have to enact it. They could just keep it in their back pocket. I think they have until November to decide if they want to use it or not. But, very simply put, if they decide to pull the reverse stock split off the table, I believe that's bullish for Opendoor. If they decide to move forward with it, I think that's bearish for Opendoor, and that could have a significant impact from a short-term technical standpoint, whether or not we hold above that 61.8% Fibonacci level of 221, and more importantly, maybe the psychological level of $2. So I believe the stock will get a major push to the upside if we find out on Monday that, hey, you know what? In fact, they are actually not going to do the reverse stock split. They believe that, that it would basically be the board saying, hey, retail, we see you and we believe in this movement. We are going to double down on this retail interest and we're going to show our vote of confidence and not move forward with the reverse stock split. So we will see what happens there. And then the second important date that we all need to be paying attention to for those involved in Opendoor is going to be August 5th. That is the earnings report. And, I could argue it's going to be the more important date than simply just the reverse stock split vote on Monday, because this is actually supposed to be, by all accounts, the first earnings report in a long time, in over 3 years, I believe, that they're going to show positive EBITDA. So definitely want to have that on your radar for August 5th. We're going to get a key insight from, the CEO, Carrie, whether or not this company is trending in the direction of being profitable. It's going to be a very, very important day. So again, July 28th, August 5th, those are in the short term, the two important dates if you're involved in Opendoor to be paying attention to. So this is, of course, a very interesting story. We will continue to follow it, of course, because it's the hottest thing in the market right now, news-wise, and it's just an interesting story. Everybody loves a good underdog story, and that's part of the reason why these meme frenzies happen, right? It's this subconscious fight between the haves and the haves not, right? The have and the have-nots is basically how a lot of people in the retail community view this battle when it comes to a short squeeze, right? They view smart money, all this institutional, shorting that's happening, and then you got your guy at home that's just trying to make ends meet, trying to push this thing up. So, that's generally how these things are viewed. That's definitely how 2021 was viewed with GME and AMC. One important thing to note, however, is don't get married to any one single stock. I think that's very important. It's very easy to get emotional over what's turning into a movement like this. Make sure you have your exit plan. Make sure you understand your thesis. Are you short term? Are you medium term? Are you long term, right? If you're long term, you don't need to really care about the tick by tick movements. If you're trading it on a day-to-day basis, however, it's the exact opposite. But I just think it's very, very important that people understand why they are involved in a company, why they are trading it, why they are investing in it. So as for me, as a wise man once said, I like the stock. Shout out to Roaring Kitty from his congressional testimony a few years back. That was epic. But that's how I view Opendoor right now. I like the company, and I think that it can potentially have a bright future if management does all the things that Eric Jackson believes they're going to do. And if we get these rate cuts, which should be coming, we're looking at potentially a 25 basis point cut in September. I think there's a good chance of that. That's just the beginning of those rate cuts, and that's tailwinds, again, for Opendoor. So that's what I got for you on Opendoor. Now, keep in mind, this week upcoming as well, we are right smack dab in the middle of Q2 earnings season. So we got some big ones that are going to be coming out this week that you need to be paying attention to. We're going to get some more Magnificent 7 earnings that are going to be coming out. Spotify is on Tuesday, July 29th. On Wednesday, July 30th, we're going to have Meta reporting. We're going to have Microsoft reporting. You're going to get Apple on Thursday, July 31st, Amazon. I mean, these are big hitters coming out, so definitely be paying attention to that. You're going to get MasterCard as well. And then on Friday, August 1st, we're going to get some reports from the energy and consumer staples such as Chevron. You're going to get ExxonMobil, for example, just to name a few. So those are some of the major earnings that are coming out this week. That in conjunction with all of the economic data that we got coming out this week, the Fed rate decision, Jerome Powell's speech on Wednesday. There's a lot going on. And for anyone who's sold in May and went away, as the old adage goes, you're missing out on massive gains right now. That's all I can tell you. But we got a lot of action here in the middle of summer. So we will see what the week brings. Thanks as always for the support. Make sure to like, subscribe, share with a buddy, drop a comment. Let me know what you think about Opendoor. whether or not this is a long-term play. What do you think is going to happen with the reverse stock split, as well as the earnings? Let me know what your thoughts are. Appreciate the support as always. And folks, remember, plan the trade and trade the plan. Have a good one.